Well, David, it's Monday. I gotta start dating these things because everything's changing so fast. So if people listen a week from now, they'll know when this was recorded. So today is the March 16th. And I only say this because I recorded with my friend Michael Yan last night, Sunday evening, March 15th. And I think you're familiar with Michael's work, right?
Yes.
And there's so much going on right now that, like, I don't know about you. I mean, how do you, well, I'm going to ask you, how do you keep up with everything going on? And what's at the top of your list right now?
Well, I mean, obviously the Persian Gulf is important, but I'd say at the top of my list is money, metals, and interest rates because it really underpins the functioning of our society, and I think it's intimately related to what's going on in the Middle East as well right now, Mike.
Do you, I mean, just before we started recording, I saw just briefly on X, what happened with the metals market in London? Is it the LBMA was trading halted on specific metals, or what was that?
No, it looks like there's a disruption in the London Metals Exchange, and that's base metals. So that'll be your copper and your zinc and your aluminum, et cetera, the trades there. So I didn't dig into it. I saw the headline, and but I mean, we've had so many disruptions over the last 14, 16 months. From delivery delays in London, which is the world's biggest gold and silver market, to ceasing trading in London for a period during the daytime in October last year, to disruptions in the COMEX, or the Commodity Exchange, which is run by the Chicago Mercantile Exchange. It's the major U.S. Gold and silver futures market. So it's almost like okay, well, there's another one type of thing, right? There are continual disruptions in these markets, so they're not functioning as they should in terms of price discovery and reliability.
What do you make of all this? Why are these disruptions happening so frequently now?
Well, I'd have to go back to the beginning in terms of gold and silver are they have a 4,000 year history as being monetary metals, so used instead of the currency that we have today, which is government created digital notes, but which are really units of debt when you look at the ultimate origin of them. But the monetary metals have always competed with government currency in terms of being warning signals of when the governments are running loose monetary policy or creating too much of it. And so, if we look at an Austrian school economics definition of inflation, inflation is always defined as an increase in the amount of currency outstanding, or the currency stock. They call it the money stock, but it's currency, so we'll call it a currency stock. And then prices rise after you've increased the amount of currency that's in the system after a period. But what mainstream economics or government economics have promoted, over the last 50, 60 years, is a redefining of the definition of inflation. And they say that inflation is a rise in the price of goods and services. And so instead of saying it's an increase in the amount of currency, which the central bankers control and ultimately the governments control, it's something that shows up in goods and services prices. And so the view is now that we only have inflation if you can find it. It's not an increase in money or currency which drives financial markets and other things first. They increase first, and then ultimately goods and services prices rise thereafter. They're saying, well, it's only a rise in goods and services prices. And the connection back to gold and silver is that when monetary policy has been run too loose, gold and silver have run so high so quickly that it feeds into it. It runs into a feedback loop where people are selling bonds and buying gold and silver, physical gold and silver. So bonds are falling in prices, interest rates are rising, and gold and silver prices are spiking much, much higher. And we saw that in the 1970s, Mike. We saw silver ran up by 24 times from 1971 to 1980, and gold ran up by 21 times from 1971 to 1980. And as the buying of gold and silver and selling of bonds dynamic accelerated, it ended up pushing up interest rates ultimately up to 19%. And clearly, when we have a economy which is structured on massive amounts of debt and massive amounts of leverage, you can't have that dynamic occurring today. And just one last note here before I hand it back to you is that the reason that we've gotten to this point in the first place, there's over $300 trillion of debt globally, is that gold and silver essentially were turned off as a warning system starting in 1986. The UK runs the world's biggest physical gold and silver market in London, in the city of London there. And Maggie Thatcher passed this Big Bang Financial Reform Act of 1986, which handed control and oversight of the London gold and silver market to the Bank of England, which is the UK's version of the Federal Reserve. And so if you think about it, it's like, okay, you're handing control of the gold and silver market, which is the primary warning system of central bank abuse of currency. You're handing control of that market to the central bankers who create the currency and who have the potential to abuse it. And so what we saw was the creation of the London Bullion Market Association in 1987, which basically created a set of rules for operating the London market under the oversight of the Bank of England. And they created these promissory note instruments for gold and silver trading in the cash market. It's primarily a cash market in London that sets the global price for gold and silver. So they were able to, with the creation of these promissory notes, create infinite gold and silver supply since 1987, beginning of 1988. And this is what has allowed the running of interest rates from 19% in 1980 down to 0% for the better part of a decade up until just quite recently when the rates started to rise again.
Why would they have turned it over to the Bank of England in 1986? What do you think the thought process was in that?
Well, you can run infinite loose money and Nirvana is yours.
Right.
Right?
Keep the party going, right?
Well, until it fails, right? And you know that it's essentially a price fixing system that they created. So they ended up creating this promissory note system in the most important gold and silver market globally. Like all the mining companies, until very recently, have set their prices at which they sell their metal based on the London daily fix, as they used to call it. Now they call it the auction price. But so you turn off the warning system, and you have infinite loose money. But you could look at it like very similar to alcohol or alcohol abuse. Is that sure, you can drink unlimited amounts of alcohol, but it doesn't end well. And it would have been visible to anybody at that period that they could run very loose monetary policy for a period of time. But that in the end, it ends very poorly in that your fixing system is vulnerable. Your promissory note fixing system is vulnerable to shortage of metal and demand for metal. And it will be shown to be a fraud when people can't get metal for their promissory notes anymore. And that's what's starting to happen now. Like last year, we had effective default in London, starting in January and February, where they were dragging out these delivery of gold and silver for 8 to 10 to 12 weeks, where it should have been a 2-day period of time. But, gold and silver have basically broken out, I'd say, since about 2021, and they've become totally unmanageable. And when you lose control of gold and silver, ultimately what it means is that you've lost control of these low interest rates. And that has meaning when you live in a debt bubble society.
So do you attribute these recent disruptions to the party is ending and the system is breaking based on there's too many promissory notes out there and not enough actual metal to deliver?
Yeah, we've seen, rising lease rates for silver, especially. Like silver is the wild child. There aren't large repositories of silver in the hands of central planners at the central banks or in governments. And the price fixing that has gone on. When you have price fixing, when you price fix down the price of an asset artificially low, you end up with overconsumption and underproduction. And so if we look back to like the year 2000, the price of silver was $2 an ounce. And it's a recipe when you do this for decades that you have this promissory note system that sets an artificially low price for both metals, that you get artificially high demand and artificially low production to meet the actual market requirements. So silver has really started to be extremely problematic now over the last 12 months. And we've seen a soaring lease rate and shortage. And, the price in China is running between $10 and $12 above the Western price. And that's like a big Hoover drawing silver overseas, because it only costs $2 in terms of logistics and insurance and shipping to get the silver from Western vaults over to China. And the analysis I've done is that there's about 170 million ounces plus or minus that's liquid in the major exchanges right now. That's the best that I can deduce. And these are, it's a market that is annually, it's about a 1.2 billion ounce market. And we're scheduled at UBS, the Swiss bank, is estimating a 300 million ounce deficit this year. And so, yeah, we've got a problem that the price of silver is totally not behaving. And gold will certainly follow. They move in tandem over time, not always at the same time, but they do move coherently in time together. And that this will put pressure on interest rates. And I mean, you can see it even with the 10-year note, or the 10-year bond yield, pardon me. You can see that since the start of this war, that the interest rate has actually gone up. Right, the yield on those instruments has actually gone up, and that people are selling those bonds. And so this is not the dynamic you would expect, and it's showing things are out of kilter. And 3-4 years ago we had 0% rates, and now they're of the order of 3.5-4. They've been almost up to 5%. So this has real meaning when you've got a global. Just valuing securitized assets that are in the markets, stocks and bonds together are $270 trillion. And if those start to be, if interest rates continue to rise, they will be increasingly sold. And so the total supply of gold and silver to market on an annualized basis is, at current production and recycling, is only of the order of about $0.8 trillion a year. So you have to have a very small amount of these financial instruments sold to send gold and silver ballistically higher. And they're ultimately ringing the alarm bell on the inflation monetary policy that's been, let's say it's been kind of an occult monetary inflation that's gone on because the consequences until very recently of the monetary inflation that's been run since the late 80s was a continually higher stock market and lower bond yields. They went from 19% to zero, increasing the value of the bonds. And then all of a sudden, I think there's going to be an explosion of gold and silver that's coming, and the yields will continue to be forced higher. And so back to the root of your original question is like, why do you think this Mideastern excursion is happening? It's like, well, if you've got business that you need to take care of, and it involves the military and budget deficits and things, that is about to be taken away with much higher interest rates. And so my personal view is that Trump's handlers and Netanyahu's handlers told them to get at it. And I think they've done that because the window is closing for dealing with some of these geopolitical issues that they're trying to deal with and shaping the world in the way that they and ultimately the globalists want to see the world move forward.
Are you surprised since the war has started? What are we on now, David? 15th, 16th day, I think.
Yeah, yeah. I think it was the February 28th in North America. Yeah.
Which was a Saturday morning, or early Saturday morning. So, are you surprised that the prices of both silver and gold have not they've kind of flatlined, right?
Yeah, they have. A number of things have happened. I mean, the stock market has rolled over somewhat since then, and I think also the alarm of what is going on has caused some people to start selling assets. So I think that there's a financial market aspect to this in terms of the leverage that's in the system is starting to be covered by people who are behaving more cautiously, are expecting a big downturn, and are selling assets in general. And I think that is feeding into it. And also rising interest rates also impacts the cost of margin that people are using to drive the financial market, have been using to drive the financial markets higher. So we always have these kind of temporal, at the start of a crisis, we always have a kind of a temporal short-term effect before you can see the true nature of the following trend as a consequence of the event. So nothing is set in stone yet in terms of what has happened, but certainly the oil running higher the way it is and bonds starting to sell off is not a good signal for the markets, right? The markets are dependent on loose currency policy to drive them higher. And the signal here is that monetary policy is going to be forced tighter by the markets by selling of bonds.
Yeah, I definitely want to get to the oil portion of this conversation, but before that, are there any parallels? I know history never. What is it? History doesn't rhyme or never repeats. It repeats itself, but
it doesn't repeat, but it rhymes. Yeah.
Yeah. Are there any parallels or similarities that you see from 1971 to 1980, the rise of gold and silver, to today, or not?
Well, there has been for the last 3-4 years, there has been a steady cadence higher of interest rates with higher gold and silver prices. And that is for certain the dynamic that went on in the 1970s, right? The loose monetary policy of the 60s for the Vietnam War, putatively, and guns and butter of the Johnson administration, and continuing loose monetary policy in the 70s under Burns of the Fed, and then gold and silver just became uncontainable. I mean, they had been fixing the price of gold, but I mean, U.S. Treasury in 1 week before they actually, in August of 1971, when what they called closing, they closed the gold window where other central banks could get gold for U.S. dollars. But there was a 1 week period there where the U.S. Treasury lost 5% of its gold. And so they had to say, well, that, clearly that's an unsustainable policy if you're going to run loose money and allow other countries. And France sent a battleship into New York Harbor and said, we'll take the gold. And that basically terminated the ability for the U.S. to back the U.S. dollar with gold for other global central banks. But after 1971, it ran, it was like a house on fire, essentially, gold and silver, for the next 9 years until Volcker ultimately had to raise the overnight rate to over 19%. price inflation at the time was of the order of 10 to 11%. So it gives you an idea of how far you had to overshoot to arrest gold and silver, and stop that dynamic of buying gold and silver and selling government bonds. So back to the original point of the question, I would see the parallel there in terms of we're starting to see this dynamic again of selling of bonds and rising gold and silver prices globally. So yes, there is a parallel there, but it's just getting started right now. And the monetary inflation that's gone on, if we look, basically from, let's say, like 1980 until today, just let me look at the numbers here, but roughly the total amount of M2 currency in the system was 1.4 trillion in 1980, and today it's 8.5, 9 times higher. It's $22.5 trillion, right? So that monetary inflation was essentially, for a period, was sequestered in financial assets, in stocks and bonds that went forever higher, right? Interest rates went lower, bonds went higher in value because it's the inverse. And the loose monetary policy drove things like stocks, equities, and real estate much higher because interest rates were continually lower, and the speculation in the markets really drove those prices to the incredibly high level they're at right now. But as I said, the problem that we have is that we've had 3 or 4 years now where gold and silver have started to trade coherently along with higher bond rates. And that is the exact dynamic that these central planners don't want to see. They like to print the currency and utilize it and spur the markets and fund deficits without a consequence of having to live with a period of higher interest rates and the taking away of the fund juice. And so I see these higher metal prices and higher interest rates that have come along with them as signaling, and also the tremendous shortage of silver, especially in the market, as a signal to the financial markets that the fun times are over, and to the governments that the eternal deficits are about to be curtailed by market action.
Do you think it always feels like when we're at that precipice, though, that these people are really creative, David, and they find a way to just keep kicking that can down the road? In your view, how much longer do you think they can do this for?
Well, I mean, creating promissory notes instead of, to substitute for metal is quite creative.
Not to interrupt you, it reminds me of, when you say that, it reminds me of the movie Dumb and Dumber. Remember when they came across that cash and they did sticky notes for all the IOUs?
Right.
And one of them was $275,000 for the Lamborghini. He's like, you might want to hang on to this one, and every dollar's been accounted for.
Yeah. Yeah, it's a similar thing. So, I mean, it has been creative, but what is very difficult to be creative around, or to create a distraction around, is the fact that you've got a worldwide silver shortage. And so if you want to sell promissory notes, you really need people not to be asking for the metal. If you've got multiples of the amount of silver sold into the market. And just to give you a sense of scale, Michael, is that London, they're trading of the order of, these are their numbers now, but they're trading of the order of 800 million ounces a day of cash silver claims in their market. And that's roughly equivalent. It's 800 million ounces they're trading there a day, and its global annual silver mine supply is 825 million a year. Right? So they're trading basically the mine supply of silver in a day in London, and that translates to claims in the London market of around 2 billion ounces. And so if you've got 2 billion ounces of cash claims in the London market for immediate delivery and immediate ownership, you've got a problem if you've got only 150 or 170 million ounces in their vaults that are actually available to market outside of the privately held silver that's not available to market and the exchange traded fund silver that shouldn't be available to market. So you know, the bell is being run by these metals, and interest rates are moving stepwise higher along with them. And if you want to run an inflationary, highly market deficit, or sorry, fiscal deficit creating activity like having a war, you better do it before interest rates have gone through the roof, because then it's like totally taken off the table.
I see what you're saying now. So this war, they had to move forward now before interest rates skyrocket, right? Is that
Yeah. Well, and the other thing too is it nicely dovetails with the need to blame the price inflation on something else, whether it be the Iranians or the Israelis or Trump or whatever. It's everybody but 40 years of loose monetary policy by the central banks. They were able to sequester for a very short period of time their monetary inflation into assets. And now, as we're about to see a spiking of interest rates and an unwind of these asset prices, all of a sudden we have price inflation being driven by higher energy prices. And you say, well, it was the Middle East, right? It was those Arabs again, right? Just as they blamed the oil shortages of the 70s, on Middle Eastern geopolitics and conflict with the Arabs. They had the oil embargo, etc., right? So it wasn't central bankers that did that. It was the Hunt brothers that drove silver crazy, and it was the Arabs that drove oil crazy. And we finally got a control of this. But no, it was the central planners that did it. But they don't like to wear responsibility for their, let's call it, antisocial behavior.
How bad do you think the situation is then? What's going on in relation to the Middle East, and then interest rates at some point are going to start to climb along with metals.
Yeah. Well, I mean, the risk that we have is that you've got maybe a trillion or a couple of $1 trillion worth of commodities globally. And as I mentioned, just securitized stocks and bonds have a market value of around about $270 trillion. $270 trillion is where the monetary inflation was parked. It was sequestered there. And so as currency or money comes out of those sectors, as they are sold and real assets are bought, in a very, very short period of time, you can double, triple, quadruple the price of commodities, whether it's copper or gold or silver, oil, most concerningly, foodstuffs, right? You can have like a very, what I call a rapid onset hyperinflation, or a very rapid onset currency devaluation appear out of nowhere as people start to sell these bonds and stocks as interest rates go higher. And it's very interesting, like in the last 2 weeks here, since the start of this the attack on Iran, is that interest rates have gone higher. They're not supposed to go higher. They're supposed to go down because people are supposed to be buying bonds due to their safe haven status. And what has happened instead is that bonds have been sold, and stocks have started to be sold too. Right? So that part is not going to plan. So we'll see how it goes. If you can create a big enough panic to drive individuals, but it's across the board. And you look at interest rates across Europe and North America; they've all been going up for the last couple of weeks. There hasn't been a rush into the safe haven of government paper. So, as I say, this is still early days in terms of this market dynamic, and what you see at the front end is almost always not what lasts over time. But if this process continues, and my view is that they've lost control of the gold and silver markets. whether they can secure enough. Like, I mean, it's interesting that many of these Middle Eastern countries are also big fans of gold and likely have large stockpiles in their vaults. And, the question is whether they can demand delivery of metal as tribute, let's say, to the U.S. for their military spending in the Middle East or not, and plug the gap, at least for gold in the market for a period of time, remains to be seen. But there are large stocks of gold held in the Middle East, in many of these, let's call them kingdoms. And everything that's happened, not everything that happens is on the front page of the Wall Street Journal, right? Things happen behind the scenes, and it's not too difficult to imagine vaults getting cleaned out by military personnel and then moved in to plug the gap which exists in London or in the storage of gold in some countries.
What was your take then on the apparent shorting of oil last night? And what is Besant attempting to do?
It's tough to say. I mean, these daily dynamics to me are, you're dealing ultimately with paper markets, right? They're dealing in futures, trading in futures, and there's a lot you can do with these digital markets for a period of time, but in the end, the dominating force is physical supply. So you can do things for a short period with a futures market or with a levered London promissory note market, but you can't hold it there when you've got actual physical shortage, whether it's silver in the silver market or gold or oil in the oil market. And the fact is that around 20% of let's say hydrocarbon energy has been hindered from coming out of the Persian Gulf, and ultimately that is going to set the price, right? It doesn't matter what your futures price is. It's going to be what's the cash price for delivery, of a crude carrier. What is it going to cost now to bring it in and offload your energy supply? And we've seen interesting tanker traffic footage when you look at some of these traces of their pathway. We've seen them heading for Europe, and then all of a sudden they've turned and gone to Asia, where the price is much higher. Japan in particular is in desperate straits in terms of oil and gas supply, and even countries like Thailand I've seen that their entire fishing fleet has been basically held in port because of shortage of fuel in Thailand. And I mean, that knocks on into real food shortages Michael Yanis touched upon in a very, very short period of time. But ultimately it hits us all. You can read through some of the farm reports here in North America, and farmers in the United States and Canada are reporting in places that they have had an inability to get orders filled for fertilizer. I mean, the price has gone up by 25%, but there's actual reports of inability to get delivery of fertilizer, and now we're Northern Hemisphere. This is the planting season, and that's a real problem. There are no big stockpiles of fertilizer. There are no, we have the Strategic Petroleum Reserve, Canada, the U.S., and China has a very large one, 1.2 billion barrels. So there are these strategic petroleum reserves, but there aren't strategic fertilizer reserves. And this is the problem, that you can have a real problem with your food supply in a very, very short period of time if you can't get a proper planting in the springtime happening.
Yeah, I'm seeing now. This is something that Michael and I were talking about last night in our conversation, and my friend Matt Smith, we were talking about last week in relation to what's happening across the globe. I mean, India, they're panic buying. They're recommending. I saw in Thailand, work from home more. if not full. They'll work from. They're not mandating it, but recommending it.
Yeah.
And carpooling. I think that was in Europe. I want to say. Uh, all
Yeah,
these.
In Denmark, they were begging people not to use their cars, right?
I didn't see that. Is that what they're reporting?
Yeah, that was on Friday. The prime minister came out and just begged people not to use their cars.
And you're seeing these countries that are tapping into their strategic reserves. Japan was one of
Yeah,
them. What country did I see? They only have 18 days of gasoline left. That might have been Japan or Australia.
yeah, both of them
Was it
are
both?
not in good shape.
Something like that.
Yeah,
Let one of the YouTube trolls call me out on that because I got that fact wrong. Like, you know how people are, David. If you get
yeah.
one day off.
Well, you got to take the stripes once in a while.
Right, right. Remember the movie Goodfellas? Everybody takes a beating once in a while. The way I look at
That's right. Keeps
it.
us honest, though.
Right. But with that, with seeing all these things occurring, and it feels it's got that pre-COVID feel to it, where it's closing in on. No matter where you're at in the world, it's closing in on us. And I don't know about you, but I mean, it seems like lockdowns are coming. Do you get that sense?
Well, I don't know about lockdowns, but perhaps like we've seen them before, so why can't you see them again? But I just don't think that people are going to be led around by a nose ring the way that they were in 2020. Like we had a very naive population at that point, and I see that in the U.S. more than 50% of the population, I think it was 56%, believes that real harm came out of those shots, those experimental shots. By the way, that was Jared Kushner's program while he was at he was running that program, Warp Speed, while he was at the White House. And here he is again. I mean, Trump said last week he went to war on the recommendations of two real estate guys from New York, marginal real estate players, Witkoff and Kushner and Hegseth's recommendation. And it is pretty wild to think that that amount of blood and treasure is at risk now because of such a small group of guys telling him that this was the way to go. But I think things in short are becoming real. And with that, I mean, we're seeing a transition from this kind of a digital false utopia of asset prices, financial instruments, which were run higher for 40 years while they were able to send interest rates, from the high teens down to 0% for a decade. And that the reversal of these interest rates are signaling that there's something very different and new coming. And it's not like the bubble that was blown is going to be maintained in the face of this. We're going to see a collapse in these asset prices over time. And we're seeing this rush now into this war. And it looks to me, unfortunately, that Trump appears to be well and truly trapped with where he's up to his neck in a quagmire, and asking for others to join the effort, and he's not getting the support. Right, so I don't think there's a way out of it, and I think we're going to see tremendously higher energy prices, tremendously higher food prices, and then along with that, real food shortage as a consequence of this. And stocks and bonds and real estate values are kind of secondary when you look at it in those terms.
Yeah, I've got Sal Mercogliano from What's Up with Shipping, I think coming on Thursday, which if you don't follow his
Great.
channel on YouTube, you familiar with him?
Yeah, I follow him closely.
I always laugh when I talk to him. I've had him on for 3 or 4 years now, even before the Houthis and the Red Sea and all that, right? And him and Craig Fuller, I know I always kind of laugh because when they started their channels, people are like, well, who would ever want to watch a show about maritime shipping, or who would want to watch anything about supply chain and logistics?
Right.
And I just laugh
And
because look at how, important the work they're doing now is.
right. That's at the center.
But to me, this war, it doesn't seem like, yeah, it doesn't, I see little reports of de-escalation, but I'm not seeing it in terms of, action, right? So I don't see this thing ending anytime soon. And
No, and there's lock-in. I mean, you have these, you have lock-in or shut-in of these wells, and they don't produce like they used to if you try to get them started up again. Right? There's real problems in getting these wells restarted again and getting them producing and get these refineries going again. So we've got months of disruption of supply that's going to continue to draw down these stockpiles in the meantime. And even if everything was resolved fully today, which it doesn't appear to be happening. I mean, Persia appears to be in an existential mode here. That their view is, Iran's view is that we've got to fight this thing through until we eliminate this threat once and for all. And the really unfortunate part is that both of the attacks, the one last year in June and the one now, occurred during negotiations, right? When you're not supposed to be having those types of attacks on each other. And then how now do you convince them to enter a ceasefire and negotiate a solution? That appears to be off the table.
well, right, and also, I was, Michael and I were talking about this. Look at places like Dubai and Qatar. Dubai, wasn't that was the paradise, right? That was
Right.
the haven, the tax-free haven for the super wealthy, the elites.
Yeah.
What's the future of that country going to be in the
No
next
kidding.
10 years? I mean, everything
Yeah.
eventually comes back, right? I mean, but
Yeah. There's just between here and there, it's a kind of a rocky road, right? That's the. It's a very rough ride to get from here to there where things come back. And yeah, I don't know what happens to these places. And even I was reading, like they were saying in Iran, there's 3 million people that have been displaced. These are large. You got a country with 92 million people, and you start having these human movements, right? And I mean, Europe is absolutely stuffed to the eyeballs, with third world immigration until now, and they can't take anymore. Like, what's going to happen? And it all feeds into a kind of a chaotic worldview, Michael. Right? It's energy shortages, food shortages, and utter geopolitical instability and market turmoil as well. With the vacating of lower interest rates that have been really the rocket fuel for these markets for forever. People just thought you just need to have a piece of the market. Just like they used to think all you need is a piece of the real estate market to become independently wealthy. And we can certainly see that dynamic has gone away.
the how as long as you've been doing your work covering metals, where would you rank this period that we're in, which you're saying, unless I misunderstood you, we're in the kind of the beginning stages, but how high is your concern with where we're heading?
Well, I think the price fixing system, which has been used for 40 years, is in the process of collapsing. And I mean, even before this, if you look at China's real estate market was already down by 25%, and 78% of household wealth in China was in real estate. And keep in mind that the former chief statistician for China said in Singapore a couple of years ago at a conference that there was 1 billion empty beds in China from overbuilding of real estate. So there, I mean, there was already a chaotic problem in China, and it's no wonder that people are rushing into gold and silver when they're looking at 78% of their assets have lost 25% now over the last 5-6 years, right? So we're in a stage now which is very, very difficult to discern what happens next. But what I'm seeing is much higher interest rates ultimately. Certainly there will be quantitative easing, I think, for the short term by the central banks to try to contain interest rates. But all that's going to do is drive people. I mean, that's basically advertising currency debasement. And when you debase the currencies, you drive the price of goods higher. And I think that'll just accelerate the run into copper and oil and gold and silver. But I think the advertisement that we're going to see on the front page of the Wall Street Journal and the New York Times is going to be that this was caused by a Middle Eastern war. And, the blame will be pinned on the bag holders, but they will not be the central bank planners and the central bankers. That's for certain.
I don't think people really understand what they're like. I feel like they get a sense that something's just not right out there, but I don't think they really understand what's coming based on what you and I've discussed for the last 45 minutes.
I think at the margins, people are starting to, like, there's a percentage of people, kind of like if you think about a wave coming in, there's always a toe of the wave that comes in first, then the body of the wave itself comes in. So I think we're seeing effectively the toe, and I think that's why, investment demand for gold and silver have shot so high. And it's not just in China, it's in Europe and the US, Canada as well. Is that there's a percentage of people that see the problem, but harking back to the point that gold and silver supply to market is $0.8 trillion a year, and you've got this $270 trillion stock and bond market, financial markets that have been destabilized, not to mention the destabilization of real estate markets, because interest rates continue to go higher. So the potential is there for step changes in prices. And, people are already suffering. I'm seeing it, in the cities that I visit, Vancouver and other cities, that very, very difficult times are starting to appear already.
Yeah, and people still haven't fully recovered from 2020, in my view. And I was talking to a friend of mine about this, and saying, he was saying, oh, gas prices. So if gas goes up a little bit, I'm like, yeah, I don't think you understand. Like,
right?
Not never. I mean, regular people are going to feel this, and they're feeling it already. But things are going to get more expensive. Every good that you buy, they're gonna pass on the higher costs to the consumers as much as they can.
Right.
And so, and we didn't even talk about the private credit side of this, right? Which
Right.
that's imploding right now, or it appears to be imploding.
Well, that's the leading edge, right? Yeah, that's the leading edge. But and people have already seen such a decline in their quality of life since the COVID thing happened, since 2020. And inflation was acknowledged to spike, I think, to 9% with their, hedonically adjusted there's half a dozen different methods that they use to state, just to lower the acknowledged level of the consumer price index. But even a guy like Larry Summers wrote a paper 2 years ago where he said that the actual price inflation in 2022 was actually 18% over the year. So if you think about like a cost of living increase of 18%, whose wages went up by 18% in 2022? right? And then we see that half of households can't afford a $400 sudden expense. They don't have the cash for it, right? That's now. That's before the coming wave of price inflation. So no, it's when you blow bubbles like this and you do it for 40 years and you monkey with something as essential as gold and silver and the bond market to create this fake economy and fake debt-fueled nirvana, there's real consequences for it. And I think that the real consequences are going to show themselves very quickly. And, Jim Rogers has said for decades now, for more than a decade, that the wealthiest guys around are going to be farmers. And, if we read the Death of Money by Charles Ferguson there about Weimar Germany, that's they became some of the wealthiest people there, but they had a very difficult time with being targeted by the people who couldn't afford food as well.
Yeah, that was going to be my next question for you was, the de-dollarization. Do you see the dollar being replaced anytime soon? Or I get mixed answers when I ask people that.
Yeah, I think what's going to happen is that, like, my personal view is that the last people that should be creating currency should be governments because of the potential for abuse, either through bubble blowing, which we've seen, or running massive deficits and running unnecessary wars, which we've seen. And so I think that the consequence of that is going to drive people out of government currency. I mean, that the plan is central bank digital currency and basic universal income, and
which they tested during COVID, right? I mean,
right,
they tested the whole, and this is what, like people, I've been saying this, especially after my conversation with Matt Smith, because I forget, sometimes you need to be reminded of things of what 2020 really was all about, right? And testing mechanisms was part of it.
right,
And the
right.
UBI was a big, I mean, to be able to put money in people's accounts simultaneously,
Mm-hmm.
it worked.
Yeah. So I think the decay of currency is going to drive us into something else. We need something else. But I mean, basically there's 5 to 8 billion ounces of silver in private hands in the States. Now, it's not all in coins and bars. It's in switching mechanisms, in cell phones and computers, and old stoves where they use that. Silver doesn't spark when you run high voltage through points, so it's used in the points in stoves and other places like that. High voltage switches. So I think what's going to happen though is that we're going to see private money arising, and that's going to compete with this universal income plan and the digital ID plan that seems to be it's the WEF plan, right? It's the World Economic Forum billionaire globalist plan for us, is to run humanity into the stockyard, off the range into the stockyard, into the 15-minute cities, back to digital things again though, right? A new digital currency that's going to make you happy and keep you in a good, safe place, and UBI from the government. But you're going to have to give up your freedom. That's the one thing you have to give up. So geofencing and digital ID, et cetera, et cetera. But back to the U.S. dollar question, like I think that it's not so much a U.S. dollar issue as it's a government fiat currency issue, and every currency in the world has the same problem. And they're basically they're all basically in the emergency ward right now, and they're having trouble resuscitating them, and ultimately they won't be able to.
Yeah, that was I think if people think that certain countries, like say China, is going to emerge from this unscathed, I don't see how that's possible, right? Like everyone's going to take a beating from this, just some worse than others.
Yeah, China's got a serious, they have 1.2 billion barrels of oil in reserve, but if you look at it in terms of Iran being in an existential fight for its life, I mean, their planning has gone on for years for this. And the thing that kills me is that this was not unforeseeable. I remember myself reading more than a decade ago that Iran had, the high end estimate was 110,000 of these conventional ballistic missiles. That's more than a decade ago. And that's me. I'm not a member of any organization or military organization. And certainly the intel available to the US government would have identified the problem with pulling the trigger on Iran as has happened. And it's absolutely staggering that this did happen, but it was absolutely foreseeable. And which brings you back to the question about like who's steering whom to do this stuff. Why is this a good idea? Right? We were about to be attacked by Iran. And two real estate guys and Pete Hegseth told me that. Okay.
What about what does Bitcoin's future look like to you?
Well, Bitcoin, like all the cryptos. There's over 20,000 cryptocurrencies, and they're all special, right? Each one is special. But ultimately, I mean, John Paulson of Paulson Funds, I think, had the best description of it, and he said, it's a limited supply of nothing.
Oh, they got an answer for you, David, under that. If you had a Bitcoin person on right now, they would have a response for you.
I'm sure. But if you want to look at Bitcoin in isolation, if you want to do a transaction in it, it uses the same equivalent amount of energy to update the blockchain, the distributed ledger. It uses as much energy as a family home does in 9 days. Right? Never mind the fact that there's zero privacy, and that many of these coins are held on exchanges which are insecure. But you want to go buy a chocolate bar? Like they were promoting it as you could use tiny fractions of Bitcoin and do transactions with it. Well, I mean, never mind AI coming and driving the cost of energy much higher. And now we've got this oil price spike, which is going to drive the price of oil. And I don't think it's a spike. I think it's finding a new level that's going to happen here. And the problem that we have is that all real assets are going to find a new level.
You mean a new normal, David, like in 2020?
Yeah, it was interesting how that word entered our lexicon. The new normal, right? It was highly promoted. Yeah, but it's not normal. And but Bitcoin is useless as either as a privacy instrument or as a transaction instrument. So you can say, well, you can use it as a store of wealth. Well, only as long as people perceive it as having value. And I mean, it's basically a digital Pokemon card. And yeah, there's people that want Pokemon cards, but over time, let's wait and see how well they do. And especially in a crisis where you have trouble getting food, and perhaps energy becomes dysregulated, and you start having problems of intermittent power, right? Okay, how are these digits doing you, right? Like everything becomes local and everything becomes real in that scenario, Michael. So yeah, I'm not a big fan of any of the 20,000 plus different types of crypto coins out there.
Well, there's 20,000. They're all special, right? So it's hard to choose one when they're all.
You just have to find the person that finds them valuable, that has something that you want, right?
So Where do you?
They compete against gold and silver. Sorry for interrupting you, but they compete against gold and silver, which have a 4,000 year history as money, and which are physical and real, and which are valued and sought in every culture on Earth, whether it's headhunters in New Guinea or Eskimos in the high Arctic, people in Africa, Europe, North, South America, Asia, doesn't matter, right? Choose your medium of exchange.
Yeah. Well, yeah. I I've had people on and that talk about it, love it. But the simple terms for me in relation to it, if the government really ever viewed it as a threat, they would have never allowed it to get to where it was. And I've used the analogy. I still don't know where I heard this from. I don't think I'd be creative enough to make it up on my own. But I use the analogy of Napster and how in the beginning, it was the music. I mean, you know this. Younger people don't know Napster, but you remember the whole music sharing. But eventually, the powers that be, they took back control of it. They shut it down, and they
Yep.
created Spotify and Apple Music, and you had to pay for it.
Right.
But it's young people, man. They love Bitcoin and they love gambling. They love the online
Right.
gambling. So it's
Right.
unbelievable to me.
Yep. I mean, there's also that Satoshi Nakamoto issue, right? Which, if you take a Japanese English dictionary and do the Japanese English translation of Satoshi and Nakamoto, Satoshi means intelligence, and Nakamoto means of a central origin.
There's no coincidences anymore with any of this stuff, is there, David?
No, so it's just kind of like, well, wait a minute, like, right? So, and not only that, but if you look at it as a giant cul-de-sac, ultimate cul-de-sac, but you can run a herd into that, let's call it a air quotes wealth category, and keep them the hell out of gold and silver, because that the Achilles heel of the promissory note system that they've created in London, which keeps interest rates artificially low and keeps the financial bubble artificially inflated, that the ultimate Achilles heel of that is physical demand. So you certainly don't want, Joe Sixpack buying silver if you can, or you want to minimize that to the greatest extent that you can. So you create this digital asset class, and it's ultimately a blind alley, but you run everybody into it and they stay out of the one that you don't want them in, right? So
That's what Catherine Austin Fitz was talking about.
that aspect.
Yeah, the idea of the Bitcoin was a distraction, so the banks could buy up the metals.
Absolutely.
Yeah,
And just so that the average person wouldn't have them, if your intent is to have CBDC accepted and embraced,
you get
right?
used to
If you
the
want
idea.
people,
You get used to the idea of it.
right? You also use it as a psychological tool to promote a concept of digital wealth. But not only that, is that you put them into that asset class, which is you create those assets from almost nothing. I mean, there's the energy cost, but it's been relatively negligible compared to the asset class's value that exists now. But it is an inflated artificial value. But they ultimately created it from almost nothing, and it was very valuable to protect the Achilles heel of the financial system, which was this digital virtual promissory note system that they created in London. You can't have people asking for the metal.
David, where can people find you?
Substack is the best, jensendavid.substack.com. And I post there a few times a week when I see something that I think might be of interest. And I try to keep the reads down to like 3 to 5 minutes. Like people don't have time for pages and pages, and certainly I don't think a lot of people, including myself for that matter, I've seen it myself as difficult to read a 10-page article, whereas I used to have, all kinds of time for that in the past. But I try to keep it simple to keep people's attention and hopefully give them something of value with each post.
I thank you for doing this, and I look forward to continuing to follow your work. And everyone listening, support David, support what he's doing, and we'll follow this along. And if you're available, I'd love to have you back on for another conversation.
That would be great, Michael. I really enjoyed our conversation today.
Mic drop.